I hope all of you are enjoying the sessions that we have been holding since morning and going ahead as we are discussing the future of NBFCs and FinTech. This particular panel discussion is specifically about the future of FinTechs. We discussed many parts of the NBFCs, including the partnership models, co-lending models with the FinTechs. But here I'm trying my best to focus specifically on what is going to be the future of the FinTechs. And एक हिंदी फिल्म का जो एक डायलॉग था, कई बार हमने वो आज़ादी के वक्त भी यूज़ किया हुआ था, तुम मुझे खून दो मैं तुम्हें आज़ादी दूंगा. मुझे कभी कभी लगता है कि फिनटेक आर टेलिंग द बैंक्स एंड एनबीएफसीज की तुम मुझे लोन दो मैं तुम्हें कस्टमर्स दूंगा टाइप. दैट इज़ वेयर वी आर हेडिंग. तुम मुझे लोन दे दो मैं तुम्हें डेटा दूंगा. ऑल दैट इज़ वेयर द फिनटेक्स आर trying to make a difference with a lot of data, and it's not just a loan aggregation, but the kind of system which they are developing, which perhaps the banks and NBFCs could not have developed on their own. So I have many questions, but to begin with, I will start with you, Sajith, and Google's perspective. I would like to have here. In terms of how at Google are you looking at fintechs now? Because every business is using Google. We at Economic Times, ETBFSI, using Google as one of the documents to, believe in the data. Every day in the morning, I tell my team, Google ante ka data pehle dekh lo. And this is how we begin. So my point to you is, Google Pay has been there in the market now, and with the UPI, you have a lot of customers. You have also partnered with a lot of fintech. So how do you see at fintechs now?
Thank you. Thank you, Amol, for having me here, and thank you for using us as well. So, very good to know that you're a user. Look, we're very bullish about this sector. We're deeply invested in payments in India. I think what has happened in the last, 5 years has been truly transformative. I don't think you've seen any other sector that has grown as fast as fintech and payments for that matter has. And so look, we see in general, you were talking about data or customers and everything. Look, in general, I think it's important that companies and in fact people focus on where their strengths lie, and banks are very integral to society, and so are now what fintechs bring to society. And so from that perspective, look, if these two sort of sectors, if you will, come together, the outcomes are just vastly better than if each of them were trying to go at it alone. Right. And so from that perspective, look, it's just like incredibly bullish, and there'll be bumps along the road. That happens anytime you're trying to go from 0 to 1. There'll always be bumps, but now very candidly, I think we're past the 0 to 1 stage. Now it's about, look, how can we take things from 10 to 100? There are founders here on this table. I'm not a founder, but I'm deeply invested in this space. There are founders on this panel who have not just taken it from 0 to 1, but now the next step is, can we take this from 10 to 100? And the one thing I would say is that if the ecosystem, if regulators, etc., everybody, if they create the right conditions for growth and partnership, the outcomes for India, right, for society and for the economy are going to be just vastly exponential than where this linkages do not happen.
Okay, noted your point, Sajith. I will come back to you specifically on the competition a little later. But Suhail, let me bring you here, and we have been hearing about BharatPe since last 1 year. Different stories, different kind of brand building which BharatPe has done along with other fintech companies in the country. My immediate question to you, or maybe the companies like BharatPe, is now, after becoming a unicorn, after raising so many funds, after being in top 5 specifically, what is your major focus area? Is it going to be the profitability, or just adding more numbers to the balance sheet and becoming maybe, multi-unicorns going ahead?
I think unicorn is an outcome, to be honest, right? Actually, I've had this question asked to me so many times, and I have always answered in the same way, that I actually don't care. What is the valuation of the company only matters when you're selling your company, right? Otherwise, it's just a paper number. And therefore, to chase balance sheet is at least not our game. Balance sheet is bank's business. Let them manage it, and they are much better at managing it than us. I think for us, the mission is still the same, right? Credit enablement. We launched BharatPe with a very clear thinking on payments is not where we will make money, and credit is which we will monetize. And like if you look at purely on, and this is not only BharatPe but a lot of other companies put together, what we are able to do on credit today, at least if I just talk about BharatPe's numbers, we add roughly 50,000 people to the credit basket every month, which are guys who've never got a loan. They don't have a credit history. And then if I sort of combine all the other players who are trying to do similar stuff, we are adding like sort of 1 million credit people every quarter to the market, right? This is a type of growth or credit enablement which has never happened in the past, right? So, and that's sort of the bigger mission, right? I think if we are able to do that, valuation will take care of itself, because even in India today, there are only 20 crore people who have a credit history or who can get credit. I'm not even talking credit card, which is like 5 crore odd people, right? So, so the market is huge enough. If you can have $100 billion banks, and if you can have like multiple $10 billion banks, I think there is no reason why you will not have many FinTechs at the same scale. But to me, continuing to build the credit muscle, continuing to underwrite new people who are not historically getting credit, and working with banks and NBFC partners is more important.
Sure, Suhail. Let me bring you here, Sumit. And a lot of FinTechs or startups, how coming into the picture because funding is easily available. In fact, one angel investor told me that a startup went to him and, told him that he wants to raise funds. And the investor asked him, okay, where is your product? He says, once you fund me, I will create my product. So that's how, in fact, a lot of startups are also looking at it. So has fundraising become a fashion? If yes, will the funding tap be narrowed going ahead? How do you see that whole funding cycle for the FinTechs? Because every FinTech is, or maybe, except maybe one or two, those who are listed, every other FinTech is depending on the funding, right?
See, I think every market goes its ups and downs, right? We've seen it, whether it was 2008, 9.
Just one second, Sumit. Is your mic working?
Hello, can you hear me?
Yeah.
Cool. Sounds good. So I think each market goes through its ups and downs, right? And, there are times when there is funding available on tap, as you said, and there are times when funding is a lot more tight out there, right? I think, if anything, at times like this, it's an opportunity for a lot of companies, because if you get out of this phase, you're probably going to stand tall very much after that, right? I think at the end of the day, for any company, it comes down, in my mind, to two things. One, can you add value to the customer? It could be in the form of credit. It could be in the form of actually changing their lives. What value are you adding as a company, right? When we had folks like, whether it was the Google Pay, Phone Pay, or WhatsApp, or any non-FinTech, it changed lives in the way they actually dealt with it. If a company can do that and at the same time have a sound business model, sometimes that business model is profitable on, year 1, sometimes it's on year 3, 4, that's fine. The question is, can you keep adding value and get to that break-even point very soon? And you can't say that you'll get a break-even point 10 years from launch or whatever. That just doesn't work. You need to get there in a couple years at best.
Okay. Sure, Sumit. Siddharth, let me take your views. You're relatively a matured FinTechs compared to many who came in last 2 years, and it had a different run altogether from wallet to all. So how do you see the rally in FinTechs right now? Do you see that they are there only because of the funding, or they also have a profitability or the business model in shape or in place?
Thanks, Amol, for having me here. So the way I look at it, Amol, and obviously Freecharge is actually at an intersection because we're owned by a bank, but we behave like a FinTech, so we're somewhere in between. If I look at India as a country, the opportunity on products and services is so huge that I don't think the rally is ending. as Sajith said, there will be bumps on the way in different forms. It could be funding, it could be regulation, it could be something else. But if companies are able to build sustainable business models, which over a period of time can generate revenue, and do that by balancing growth aspirations, which is obviously important, and putting governance, processes, systems in place, I don't think there is a line of sight saying that there is rally is going to end. I think the rally is just going to continue. My view is that if fintechs can get the combination of regulation, consumer, and tech right, I think there's no stopping.
Mukesh, along with the fintechs, there are 2-3 different trends. The fintechs who came with banks and BFC partnerships, then the insurtechs, now wealth techs. I can see a great rally in wealth tech business also. So, what do you think will make the fintechs operating in this space, to ride the rally in a far more massive or a significant manner?
So, first of all, thanks for having me here. And I think from a wealth perspective, there has been a massive rally for the past 3 years. Everybody has lucked out on that rally. But essentially, I think there are a few big challenges that the ecosystem will need to actually overcome. One is definitely about how do you make a sustainable business and drive more revenues. And today, I think there is this huge challenge of misalignment, because everybody is driven to make money off transactions. And when everybody is driven to make money from transactions, the end user goal of whether the person is able to create a second income stream by investing is kind of lost, right? Because there are ecosystems that are getting created to actually keep on making you invest in a stock or a mutual fund or multiple, even crypto, right? What happens is in that scenario is, so that misalignment will need to be kind of figured out in the space. I think from, the first wave was all about really kind of making the, transactions much more simpler. Now it has to be more value adding, as Sumit was saying, to the end consumer. Can we actually align our businesses to really deliver the outcomes that the industry is supposed to deliver? Like in wealth tech, the outcome is to help you reach your financial goals, right? And the business model innovation has to be on top of that, which is more aligned to the consumers than actually being commission or transaction led. So I think those are the 2-3 things that have to come together to make it, large, I think.
Okay, I think noted points from all of you. Sajith, let me come back to you. And I think, within a very short span of time, the payment sector or the payment segment has matured really well. The QR scan code payment or somewhere biometric. I mean, everybody, almost every second person perhaps is using the QR scan code. So if I ask you specifically now, what next for Google Pay? Specifically in the payment space, how will you scale up in the payment system, and what kinds of new initiatives can we expect from Google Pay?
You're asking me to make forward-looking statements, which, but, by the way, one thing I disagree with Amol, as you said, payments has matured very fast. No, I think we're still in day one. It's very, very early days. What payments has done, though, is that the coverage has grown like incredibly fast, in such a small time, with all the investment that's been made by, those who are playing in it, and also, the policies and regulations that have aided this. But it is still day one. There's still so many things that I think we need to do, and we also need to get right, in which, you can start to see there's so much you can build on top of payments, and indeed make payments even better now. Because even today, for example, see, reliability on UPI is like an area that still needs a lot of work. So, just getting those fundamentals right is very important. And then on top of that, if you think of it, see, there's a set of these things that I think different players are doing, including those on this panel. Credit, Suhail talked about. There's all sorts of other things that are going to start to emerge that, people are going to want to put out, that you will start to see, some sort of flavors of different kinds of that happening. So it's not just, I think payments is kind of like the backbone or the foundation on top of which you get to build a lot of different services that makes the lives of both users and businesses better. And that, very candidly, is also what we are kind of focused on as we build. But I genuinely think that we are still in day one of kind of how we optimize for this payments experience and make it absolutely flawless for users and businesses alike. So it's still very early days in that sense.
Okay, sure. Suhail, let me bring you back here and maybe learn more from you in terms of what can fintechs do with the credit. Like you mentioned, the underserved market and the untapped market is huge. Most of the financial institutions cater to the same pie because of they do not want to take risks. But I think fintechs are making a difference by tapping the different market. But how can they prepare themselves to prevent from the disasters because they are touching the area which can take them to a disaster? So what are your learning there? What are the precautions that you are taking which may be helpful for other fintechs which are going in that direction?
I think it's by the way, it's a combination of a few things. Yeah, this is okay. I think it's a combination of few things. First of all, I don't fully agree with the statement that it's a risky territory. I think it's a difficult territory to serve. Like I take a very classical example, anyone from a bank, please pardon my ignorance, but if I ask a 50,000 loan from a bank will not give it to me. If I ask a 5 lakh loan, they will. It's very simple, cost of underwriting, cost of collection, everything is fixed rupees. So if I take a 50,000 rupee loan, the bank will still lose money even if I do like one thing wrong, right? So I think the ability of technology to enable micropayments happen is a large reason why fintechs are comfortable giving 5,000 rupee loans as well. It is not because the banks don't see the risk and banks can't always underwrite. The second one is more obvious, right, which is alternate data with what sort of UPI system has done, which enables us to do a lot more things. And I think the third thing is we do generally look at a lot more alternate data than what a conventional company will do, right? So everything from location to what other apps does a person have on the phone, how many credit inquiries he's done. But I think I don't want to make it all about credit. I think we just heard a very interesting thing on payments actually have just right now set the platform and that to a platform which is like 90% there, not there. I think what a great payment system does is it allows us to do everything from credit to investments to insurance to like commerce a lot more seamlessly, and therefore I would actually like a lot of us have started with credit because that's an obvious use case. But to me, at least the core thesis of BharatPe, which was a merchant will pay you money if you give him credit. A merchant will give you money if you send him new customers to the store, which many of us haven't even touched, right? Some people are sort of doing it in many ways, but sort of someone like Google Pay or like now someone like us with a consumer proposition, our ability to send incremental users to a store, not only to sort of large modern trade chains or e-commerce, is incredible, right? So that's how we create value. Putting all baskets in credit is by definition risky, right? So and it will go through its ups and downs. But I think we've just done great job at credit or relatively great job at credit because of our ability to sort of do micropayments at fraction of a cost than what it would cost anyone else.
Okay, thanks for that, Suhail. Sumit, what do you think about the whole ecosystem? Because at one side, the regulator is coming with different segments like account aggregator. They're also working on public registry. Fintechs are also partnering heavily with the banks and the NBFCs. So what do you think about the whole ecosystem? Is the whole ecosystem ready to lift up the fintechs to the next level?
I think definitely, right? Like if I look at what's happened in the last 5 years in fintech in India, a bunch of innovations done by whether it be the India stack, whether it be what the regulator has supported and come up with new innovations from the regulatory side itself, has been at the forefront of making things happen, right? Like if you look in the last 10 years, Aadhaar was phenomenal. UPI is why like a lot of us are here, right? Like in that sense, whether it was Google Pay, Phone Pay, BharatPe, UPI had a key role to play, even QR codes and so on. And there's a lot more happening right now. You spoke about the account aggregator, right? You know, I saw the UPI journey grow when I was part of Google Pay and take that up initially. And now I'm seeing the account aggregator play out pretty similarly. Still very, very early days, very similar to, you know, UPI in 2016 when RBI had launched that in August of 2016. You're seeing account aggregator opening in different avenues, just to name a few, right? Of course, everybody talks of account aggregator as making credit very easy with small sachets of loans and stuff. But there's a lot beyond possible with account aggregator, whether it be advisory services, where I can now have a better idea of users, you know, deposits, card loans, everything, and being able to give better advice on what instruments to use. Fraud protection, right? You can start monitoring statements and build security services on top of that. Identity, KYC can become so much better with account aggregator, right? Ability to just connect your accounts, give you net worth and value out there, right? Like account aggregator literally has at least 10 different markets to be built for FinTechs, which has not even started yet. You talk about OSEN, you talk about ONDC, right? Like the list goes on, and I honestly, to me, right, like India has infrastructure there today, which is probably way better than any other market globally, right? Like, and if you can't innovate with everything given, then it's for us to, you know, we have got something wrong. I think there's plenty in there for FinTechs to make it big.
Right. Siddharth, with your expertise, do you think that only the partnership or the collaboration model is successful model for the FinTechs? Because considering you are, you know, acquired by a bank, but still operate as a FinTech company or individual company, started on a different note altogether. What does your experience say? Because this whole journey started as a competitor. The FinTechs were competition to banks, then the banks started partnering with them, and now everybody is walking together parallelly and they have partnered with each other. So is that the only model that the FinTechs can have going ahead?
So, Amol, yes and no. So let's start with payments. And if you see payments evolved very differently. It was the FinTechs which took payment to the scale that it is today. Banks were there, yes, because the regulation had to be that way. But it was the FinTechs or Google Pay, BharatPe, PhonePe, which took the payments to where it is today. We were also a part of it as Freecharge to that extent. So it's a yes and no. There are some things in which the standard, where banks will come into play, like Suhail raised the point on balance sheet management, which banks do far better, which FinTechs might not be able to manage. So that's where the banks will come into play. So that availability of capital, again, banks will have far easier access to capital at cheaper cost. So when you look at it, there are platforms or places where banks will become important partners for FinTechs. See, today we look at FinTechs fighting banks in some places, friends at some places. I think over a period of time, as you go into the future, I think this will converge. Also, the reason is FinTechs, as Suhail said, is targeting a segment that the banks always avoided to that extent. And banks were targeting a certain segment, so you had segments which were different, which were far apart each other. I think over a period of time, the convergence will happen. The banks will move to the segments that the FinTechs are playing in. FinTechs will move to the segments that the banks are playing in. And both of them will work together as partnerships, both on distribution of products and creation of products. So there will be products that will come out, which will be very tailor-made to that segment. And if I look at Freecharge and Axis Bank, to give you an example of a FinTech and a bank, though they own us, as Suhail said, we've started doing those sachet loans on the Axis Bank platform of 40,000, 50,000 rupees to the micro businesses, right, and collecting it through the QR ecosystem, which is the payment settlement, which is what was 2 years back. I don't think the bank was even looking at this segment.
Okay.
So that change is happening.
Okay.
You know, if you want to go fast, you go alone. But if you want to go far, you must partner.
Yeah.
Right? So
yeah. Interesting. So Mukesh, you know, I perhaps don't have a direct question to you, but maybe one or two thought here. if I told somebody earlier when I was working for TV that I'm a finance journalist, the person will ask me, "Acha, kaun se stock kharido bata do." You know, even today most of the people ask me cryptocurrency kharido ki nahi kharido. What I see in wealth tech, you know, kaun sa stock kharido, whether I can make money. So what most of the wealth tech are doing is they are distributing the product of the insurance mutual fund companies apart from the brokerage service which they provide. Now, any which way the penetration is very less of the whole mutual fund or the insurance business. So my question to you, Mukesh, if you could, you know, put me like this is, what will make wealth tech make wealth for themselves, you know, going ahead and maybe make a successful model, because they are not going to manufacture their own product. You are ultimately going to get a commission which is being perhaps regulated or monitored by some other regulators or something. So any tech there. Why I'm asking you is also this, because a lot of now people are entering in the wealth tech area, and many wealth tech, you know, mobile applications are there. Yes. That's it.
Yeah, it's a great question actually. How do we make money in wealth tech? Indirectly, kind of a direct question. So yeah, I think there is, to just give you the size of the market, it's quite crazy. The whole broking industry is a 30,000 crore revenue pool, not anything else. AMC businesses are like a 15,000 crore revenue pool businesses. And distribution and intermediation are other 15,000 crore businesses, right? So I think there is a 60,000 crore or 55,000 crore pool out there for the wealth tech players to, you know, first that is growing, right? And the second is that there will be a displacement of these pools towards more efficient players, which are, you know, coming out to be more tech oriented, more wealth oriented, right? So I think there's a huge opportunity in terms of revenue pools. And, you know, another stat is that if you really look at it, the whole journey of, you know, online brokerages or online mutual fund companies actually started 5 years ago. And the share of consumers today is huge compared to what it was 5 years ago. And it's only a 5-year vintage versus the traditional players, offline players being in the space for like 20 years. So the share of users has now come to a 15-20%. And then the question actually came in, does it actually, the revenues follow or not? Right. But fundamentally, revenues will always follow. And now if you look at the revenue cut, right, now that is actually already at a 7-8%. So 15%, 20% is the consumer share, and 7 to 8% is already the, you know, revenue share. So there is already a clean sight on revenues to be made in the space. There's a huge pool out there. Revenue displacement will happen. And that's why I was saying that there is a need for a business model innovation, that, you know, eventually your commissions or your revenue is defined by the value additions. Today, everybody, you're questioning that you're giving me a tip. Why should I be actually paying you money if I don't make, you know, the money out of that tip? So I think it will more move towards aligning that, you know, if it's not about that tip, it's about advisory. It's about actually helping you reach your financial goals. And for that, I will ask you for money. That's what, you know, we are doing with ETMoney Genius, which aligns completely to, you know, the consumer outcomes. Right. And that is the possibility of making a huge revenue, you know, pool displacement. So I think across, and wealth tech is one just placeholder in this. You can keep on kind of doing it for other fintechs as well.
Sure. Meaningful thoughts there. Thanks, Mukesh. Obviously, I have a couple of more questions, but let me get here, you know, audience, and maybe I can take 1 or 2 questions from the audience. Please be specific if you have any questions for the panelists here. Any specific question? Yeah, please.
Hi everyone, I'm Antariksha. So my question is on payments. So we started with the fact that digital payments probably don't make as much money in India. And that has also got to do with the fact of how payments evolved in the country, right? You have a very strong and scalable platform, which is a UPI, but by regulation that is at zero cost. And we have had for a long time the industry lobbying that it should not be zero cost because then no one invests. The question is the scale and cost a trade-off? In the sense that if you have some cost, whatever it is, built into the platform, do you think that merchants will give up on the product and go back to cash? Or is that not an option at all if money is charged?
That's my favorite question. Sorry, I'm going to take that. and I would love to hear your point of view because you're on the consumer side. It's a very different story. But actually, BharatPe thesis actually started with the fact that UPI was already big. UPI on the merchant side was very small. And our articulation of it that point of time was because everyone who's doing UPI is actually a consumer company, and therefore charging MDR to merchant is a obvious monetization route. And like again, rightly or wrongly, we jumped the gun saying this is the only reason UPI has not become big on the merchant side, right? So we started with actually zero MDR. We were at least the first ones to openly say zero MDR while we were still getting charged by the banks at the back end for 5-6 months, right? And then it sort of became zero. And that's where sort of the P2M leg of the or peer to merchant leg of UPI became big. I think my simple reason to believe this is India is not a market where a merchant makes 30% margin, right? It's margins generally are 10 to 12% in every segment. In the US, where the retailer makes 30%, he is very happy to pay 2.5-3% of that to the bank, which is enabling that payment. India, mein basically you're telling a shopkeeper, I will give you your money 2 days later into your bank account and I will charge you 2% for it, right? So the guy will say, what's wrong with cash? I've been using it all my life, right? So that was our sort of thesis. I actually, like a view which is not very widely regarded by some of my peers, believe payments will become zero cost at some point of time, even credit card, debit card. What UPI has done for sort of debit in a way, I think a combination of RuPay or something else could potentially do for credit. And India has a huge vested interest in this, right? Because the formal economy or the cash economy sort of coming down and a lot more transactions coming in the tax ambit, recording ambit, has a spiraling impact on that part of the economy. And at one level, it's in government's best interest to do payments for free because it gives them a lot of other benefits, right? And therefore, I believe that trend will continue, but I would love to hear sort of a more consumer side view of this.
No, but by the way, I would say that, look, most UPI players are now two-sided. I mean, we of course, started off on the consumer side, but we now have, more than 10 million plus merchants and counting, on the merchant side. See, it's a very good question, but look, you're asking me to speculate. I don't want to speculate, but here are the facts. The facts are that, UPI has reached escape velocity. So the behavior is very secular. Both users, both merchants, they want it. That's a fact. Fact number two is that, look, there are costs involved in this. What's the way that you can build a sustainable business? So that is, I think, the question that, we're trying to answer. I don't think we have the answers yet. That different people are going at it with different models. And very directly, I mean, you're saying, look, if cost comes, will the merchant stop accepting UPI or not? It's hard, right? Like that's now, I mean, we're trying to just, anything I say actually doesn't really matter because we have to try that. We should actually try that and see. And you could argue that some of the announcements that have come in the last 2-3 days will give us some test of some kind, some A/B test of some kind, though in a narrow part of the market. But net, look, the facts are UPI has reached escape velocity. Behavior is very secular. It makes payments frictionless and pretty much is accepted everywhere. So on the back of this, how it plays, I think time will tell.
Right. Any other question? Yeah, sure. Please go ahead.
My name is Ankit Dhanuka. Given that we're talking about the future of fintech industry as a whole going forward, so my question is simple: that how the industry as a whole is prepared, for the next set of disruption when it comes to like your data protection and your privacy regulations act. So how is the industry prepared for that? Now I believe that the regulation is still in kind of draft stage, and would be sooner or later it'll be kind of implemented. So how is the industry prepared as a whole for that?
Sure.
Thank you.
Siddharth, do you want to take that?
I think Sajith would have been the right guy, but
Sure, Sumit wants to take it.
I can take it, right? Like, started my career on security and privacy.
Sure, please
way
go
back
ahead.
at Google, so can sort of take this one out, right? Like I think honestly, if you do your fundamentals right, most companies should already be ready for DEPA. Right, I can tell for myself that at 5 we are ready for DEPA. We have been doing it from day one, literally, where everything, basic principles like no data can be accessed by human beings. There's no database access for engineers or anything, right? Has been built right from day. But I think, especially for institutions that have been there for a while, there is definitely some work to be done, is what I hear from the industry in terms of changing the way access, right? Like, at the end of the day, I think security and privacy is critical for building trust. And if you look at FinTech is all about building trust. So to me, having that just helps us build that trust even faster and sooner. And sometimes it's a matter of just doing a little bit more engineering work. But my 2 cents on this is, it's definitely, look forward to seeing it in action soon across the industry.
Sure. Thanks, Sumit. So maybe we'll take a couple of questions a little later, but let me take, because we have just 3-4 minutes left, one question with all of you, and maybe you can answer it as quickly as possible, maybe 30-40 seconds. And the question is, because I have been talking to a lot of panelists and everybody is very optimistic, so I'm not concluding, but we speak about the future of NBFCs and FinTech. Yes, the future is very strong, future is very beautiful, and there can be a great growth story for the FinTechs. So my question to you, all of you is, and I will start with you, Suhail, is, if we know that the FinTechs will be successful in future, or they will be writing the great story of India, what will make FinTech successful according to you? And this question is to everyone. What will make FinTechs really successful?
I think what has got them here will make them successful, actually, my answer. I think we have to continue to innovate on products. I think, again, I'll go back to something we just heard, like the payment platform is so great now, of course, with its own set of incremental builds to be done, that it enables infinite use cases. And I think all of us have sort of started playing around with 1 or 2 use cases. As more and more use cases develop, and as every company finds its niche, I think we will have lot more FinTechs which will be at scale, and lot more business models than credit and commerce, which are sort of more explored ones existing in the market.
Okay. Sure. Sumit?
Sort of agree, right? I think the key for FinTechs is, I think, one, of course, is continue to build trust, right? Like, trust takes time to build, but can be lost in a day, right? So trust becomes the huge thing, and beyond trust is innovate, right? Like, you can't sort of keep on your past laurels and do that unless you keep adding value to the user every few months. You're probably going to be hard to build a successful business.
Sure. Mukesh?
Yeah, I think, just adding to product innovation to also other things, but I think the additional point would be that is our FinTechs able to actually unlock segments which have never been been easily accessible. I think UPI has created an amazing platform for us to actually go ahead and create massive amount of access, and then on top of that, figure out a way to have a fair value of exchange between you and the consumer. So business model innovation as a combination is what I think will make all FinTech successful. Yeah.
Sure. Siddharth?
Yeah, so whatever everybody said, I'll just add to it. We're just adding. Sure. We'll add the ladders to it and the steps. So I think what I said earlier, 2 things. You balance your growth, so build a sustainable business, balance your growth with growth and aspirations with the processes, systems, governance, and get onto the intersection of consumer tech and regulation. If you're at the intersection, as I said, there's no stopping. All of us will grow.
Yeah, no, what I would say is this, right? The 3 things, but the most important thing for me is, see, nothing that is big today, Amol, started big. They all started small, right? Like whether it's a human being or whether it's a company, you all start small. HDFC was a startup. So I'd love to see more startups, more partnerships, and if you had that, you'd get more innovation. And if this happens, then, there'll be just great outcomes.
Right. Noted your point, Sajith, and I think again, meaningful insights from all of you for this panel. And I think this rally is growing significantly as we are adding number of fintechs, not only just by fund size, but the unicorn size every month, every week. And they are now entering into different businesses, not just payment and credit, but wealth tech, insurtech, even regtech and agri-tech. Also, there are a couple of fintechs operating in this space. And banks have also now come up with different designations, not only just typical partnerships models, but now they are going to have a lot of this, not just CDO and CTO, but chief fintech officers, which most of the banks have. And as innovation is growing, they are also coming up with different designations like chief cloud officer, chief platform officer. And I think that's where, or maybe they will have chief partnerships and chief collaboration officer going ahead, which will be dedicatedly working with the fintechs. So remarkable thoughts here on this panel discussion. Sajith, Suhail, Mukesh, Siddharth, and Sumit, thank you so much for your time and sharing your inputs. And thank you so much, ladies and gentlemen, for listening to us very patiently. Thank you.
Thanks for having us.